By the phone from Dallas, Texas, is Holly Signorelli, who is a new contributor to Health, Wealth, and Happiness. Holly, welcome to Health, Wealth, and Happiness.
Hey, happy to be here.
Holly is a CPA, and she'll be on every Tuesday at this time from 1:30 to 1:45, talking about money management. And today we're going to talk about something that a lot of people equate with Christmas, Holly, and it is, how do I love thee? Let me count the ways. And in this case, American Express, Discover, Visa, MasterCard, those are the ways I express my love to you through use of the credit card to buy the gifts. And now comes the reality. I picked up the mail today, and by God, I got these guns from these credit card companies. I'm going to have to pay this debt. Something that the realities of life face millions of Americans between the first of the year and the first 10 days of this month.
That's right. You know, and Gary, this isn't just a holiday thing, because actually last year we had $68 billion of credit card debt, and it was a 34% hike from the year before. And the fascinating thing is that people are making more money now. The economy isn't perfect, and not everybody's making more money, but people have more money, and they're spending more money, which is very much what I talk about in my book, about the overspending issue.
You know, isn't it funny? When we went through the swoon, when we went through the depression, people paid off their credit cards. People paid off their debt. People, for the first time in the history of the country, discovered, this is kind of a new word in the vocabulary of life, it's called savings. My God,
right.
What a concept. Savings? What is that? But now
we have a whole generation with no savings. Yeah, it's true.
And now, as you say, now that we got a few bucks in our pocket, it's Katie bar the door. Let's go spend. And you're right, it's spending on not only gifts. My God, you go through the drive-through of the fast food restaurants, and how many times are you behind somebody that orders a Big Mac? They pay for that sucker with a credit card.
Right. I mean, if it's a debit card, it's okay because that's still cash. But, yeah, it's a real problem. And I started noting this in my practice around 2012 and especially 2013 is after the economic collapse with the housing market in 2008, people were really struggling for years. So even if somebody made a pretty good amount of money, and even with a decrease in their income, I call this a spending starvation. So just like if you go on a diet and you starve yourself, but then you want to eat, right? And it's the same thing with what happens is people they put themselves on a spending starvation, or they feel that way because the economy's so bad or their income is down. So then what happens is when it turns around and they start making more money, they go crazy. They're like, I haven't been able to do this for a long time. And instead of saving and spending and balancing the money, I have watched people that make hundreds of thousands of dollars spend every last dime of it and not put one dime aside, not even for taxes. And then you're in even the worst debt you can be in.
And if you have a revolving account and you get your monthly done from the credit card company, they give you the minimum amount that you must pay. It's usually $25 a month. And that's
right.
exactly, Holly, what they want you to pay, isn't it? They want you to pay that minimum. They don't want you to pay the entire balance. They can't make 21, 18, 35% interest on the unpaid balance. So they want you to pay the $25. Bad idea.
Yeah, exactly. People should pay, I always say 4 times more. You should pay as much as you possibly can and still be balanced. Like I said, you want to save and you want to pay your credit card debt. You definitely don't want to pay the minimum. If you're having a really bad month and you need to pay the minimum, that's okay. But most of the time, if people really look at their what I call the instant gratification spending, which is really just things that have no intrinsic value, kind of like the Big Mac thing that you just said. It's like you can nickel and dime yourself to death, and you can make choices of, okay, you know what, I'm not going to go out to eat twice a week and, spend $100 and with my spouse. I'm going to go out once a week and then put another $100 on my credit card, because you can pay them online weekly. You don't have to wait until the bill comes. You can pay every time you get a paycheck. Set some money aside with each check and in your savings, and put some money on your credit card debt with each check before you start spending on the luxurious things or even the small things like I just said.
What may be even worse are those people that get so buried in debt they rob Peter to pay Paul. What do I mean by that? They take one credit card to make a payment on another.
Mm-hmm. And another one even works with the credit cards or the department store ones, because they really suck you in and they have the worst interest rates. So I think for the Christmas debt, a lot of it comes from the department stores for sure. Because they're going to stores too that you don't normally go to buy presents for other people. And they're like, oh, we'll give you this discount if you get this card. It's very tempting.
And, the thought was, well, if we let the consumers know how long it's going to take them to pay off their unpaid balance if they only make a minimum payment, that will help them to realize they ought to make a greater payment than the minimum. And so it's clearly stated. It's like McDonald's having to tell you how many calories there are in that Big Mac, but how many, Holly, really pay attention to that?
Right. Well, it's like Care Credit. Care Credit is the only credit card that I know of that, if you know how you can go to the dentist, like if you have to get unexpected dental work, you can use Care Credit because the doctor is taking part of the risk of whether you pay the credit card back. But in each of the statements that they give you, they tell you you're interest-free for, let's say, 12 months, because it depends. This is also GE money or Care Credit, and this is also like when you go to buy furniture and they tell you, you don't have to pay interest for 18 months. But on the statement, in bold letters, they tell you you have until this date to pay this in full so that you don't have backdated interest. Because on those, if you don't pay it by the time that, whether it's 12 or 18 or sometimes it's 24 months interest-free, they backdate the interest all the way back to when you purchased it. And that's a really big hit. But at least their statements are making that very clear to you and reminding you that, hey, you need to pay this off by the state. And those can be a good deal.
Another big deal that people don't understand when it comes to credit card debt is slow pay. And I know this sounds screwy, but this is how credit cards work. Sometimes it's worse to be slow in payment, late in payment, than it is not to make a payment at all.
Right, when you pay late, it's usually when they up the interest rate. So, a few years back, there was some government regulations, and they lowered rates, and they were still high, like, 13 to 16%. But if you don't pay, it can get up there into the 20s again. So it's really important, even if you just pay the minimum, if you're having a bad month or something's tight or you have some unexpected medical bills or something like an emergency, if you can only pay the minimum, it's better than not paying on time for sure.
Here's another mistake that a lot of people make. By God, I'll tell you what, Holly, I finally got Discover paid off. You know what I did? I took that Discover credit card, I took my scissors, and I cut that sucker up into 1,000,000 pieces, and with my final payment, I sent that credit card back to Discover. Boy, I showed them, no, you didn't. You just cut off your nose to spite your face. Why is that, Holly?
Yeah, you have to be careful about that, too, with your credit. It's so interesting with the credit issues with credit cards, because you don't want to have it, if you're not using a card, you don't necessarily want it to be out there on your credit, but at the same time, if you have a credit card and you have a very small balance on it, then that can actually help your credit significantly. So you don't really want to leave a bunch of open credit out there, because then if you're trying to get something like an upgraded house or something like an intentional loan, then that could go against you because you have too much open credit. So the banks look at it like, okay, if we give you this line of credit that you want, and then you go rack up all these open credit cards, and people forget about that. It's like you said, they cut it up, but they don't actually cancel it. So that's what's important too. Or if it's good to have an emergency credit card, because sometimes things do happen and you don't have the money aside, but you just want to make sure that you lower, the credit card companies will increase how much debt you can take on. So you can call them and say, no, I only want this credit card to have $3,000 available or something like that, because they'll just start hiking it up, and then it makes it even easier to get into bigger debt.
Holly, what's been your experience with people calling up a lender, a credit card company, and saying, look, I've been making my payments on a regular basis. I'm a good customer. How about lowering my interest rate?
I think that works very well most of the time. Honestly, if you have a high interest rate out there and you've thought that you couldn't do anything about it, then you should definitely give them a call, because definitely, if you've been making your payments, and especially making extra payments, that's an important part of that equation, they will reduce your rate. And it's still, again, going to be probably 13 or 15%, but if you're at 20 or 25, you should definitely call them.
It won't hurt. The worst thing they could say is no, but as you say, chances are good. If you've been making regular payments and you've got a good history, they'll lower the rate.
And also, they will communicate with you better. I've had a lot of clients call in a situation like that. Maybe they went through a hard time and then things got better, but maybe their credit's not yet caught up to their new spending habits. And maybe the credit card company says, call us back in 6 more months or 3 more months. They'll give you those kind of options, so at least you know what you're headed for. But you're right. If you don't call, then you don't know.
Holly, you've written a book, and it's kind of a consumer-friendly book for people. Tell us about it and how they can get a copy.
It's called Do You Know Where Your Money Is? And I actually have a trademark on that phrase, because for so many years I've had so many people, like on a weekly basis, come into my office and literally say to me, I don't know where my money is, or I don't know where my money went, especially business owners that tend to spend a lot of money out of their business account on personal things, so they kind of lose track of it. And the book was written after, like I was talking about at the beginning here, after that last crash there in 2008, as things began to get bigger, I saw spending habits that were really so bizarre and so much overspending, even though people had money to balance their spending in a better way with saving and spending and paying down credit card debt. They just got into more debt than ever, even though they were making hundreds of thousands of dollars. And what I realized, and this is fascinating, is that there's 9 emotions that dictate people's spending, no matter if they make $50,000 or $500,000. There's only probably about 5% of the population that knows how to balance their spending and doesn't allow the emotions to take place. So that's why I wrote the book, to kind of expose that issue, because you can do financial planning all day long, but people don't follow it. They're not doing it. So if we don't address the emotions that are causing us to do it, then we can't fix the problem.
How can I get a copy of your book?
It's on Amazon, and it's also on my website, themoneytherapist.com.
I thank you so much for sharing on Health, Wealth, and Happiness, and look forward to having you back next week.
You bet. I'll talk to you next week. Have a good one.